Hey traders, Todd Gordon here with TradingAnalysis.com. This is going to be your free video update. This is going to be for Thursday, July 9th. And let's take a look at the S&P. We had a very busy day, a volatile day. The New York Stock Exchange was down for 3.5 hours today, which, as an aside, literally during the outage, I got the bill in my email for last month's data from the NYSE. So I was like, you got to be kidding me. You can't make that stuff up. But anyway, so pretty volatile day with NYSE down. But let's take a look at what the markets are doing here. We're using eSignal's advanced get here, and we're moving into some pretty interesting fib, price, time, and some Elliott wave support. So let's dive in. We're looking at the 3-hour chart here of the SPY. Okay. Now, first thing, let's take a look at the timing aspect of the decline that we've seen in the SPY, which is the spider. We're going off of the May 21st high here of about $213.90. If you count the amount of bars that were involved in the decline from the late May highs down to early June, that was 34 bars, okay? 34 bars of the 3-hour bar. Do 34 times 3, that's how long in hours that lasted. Okay, so then let's project from the most recent decline that began on 618, interestingly, June 18th, down to the low that we've seen so far, which was July 7th. That was 35 bars. So far we've seen a very symmetrical in terms of time pullback. Let's look at the price. I've done 2 fib studies for you, okay? I've done a Fibonacci extension of the May to June decline and then projected it down from the June 18th high. That first one is the blue Fibonacci level. The 1.618 relationship is at 203.60. Okay, so take this distance decline, this distance that sold off, multiply it by 0.618, and then project that down from the current decline, and that gives you a low there. The other fib study I've done is an external retracement of B wave. So whatever this distance was, multiply it by 1.618, project down, and that gives you 204.24. So basically what we're saying here, guys, is, let me do my best weatherman impression. This low right here is a very key time and price support level. And if you just look at the overall structure of this move, it really looks like a big 3-wave move down. Okay, so I have some long positions. I'm going to talk to you about a long position we just put on. I also have some shorts, but I'm very ready to cover up shorts if we start to hold this, especially after today's confusion. All right, so let's keep an eye on that 204 area from a price and time point of view for reversal. One of the trades, and we've talked about this before, is Signa. And actually I moved on Signa today. So let me just set up the trade. Using advanced get, we have a first wave up, second wave decline, big wave 3, and now we just did an A, B, C correction, okay, in wave 4. We have the possible stopping points from advanced get on fourth wave, but let's go to work and do some of the fib studies. So first thing I'm going to do is I'm going to do the Fibonacci extension tool, which is right here, and I'm going to project wave 1, the end of 1 down in 2, and then project that off of the end of 3 to give us 4. Basically what you're doing is you're projecting wave 2 compared to wave 4. So let me do that. I'm going to shut the video off here so you don't have to watch me go through all, but I'll show you the finished product here. Okay, so here we go. I've taken the distance in wave 2, projected it down from ongoing wave 4. You can see the 1.618 didn't hold, but the 200% is just below us at $149.20. Now the next Fibonacci study I'm going to do is a retracement of wave 3 down in wave 4. We're starting to stack the zone here a little bit in the fourth wave to try to find a low. So I'm going to take my retracement tool. I'm going to go low to high inside of wave 3. And you can see right now, let me clean this up. You can see the 50% retracement is right below the 200%. So I'm going to stop the video now, clean this up, and we'll show you the zone. Okay, so the work is done. Now what I've done is come up with a really good zone using both extensions as well as retracements in wave 4. The zone exists between 149.20 and all the way down to 142. So we went long Signa today. We actually sold a put credit spread, which is selling puts just below the market. and then buying even further out of the money puts, collecting a credit. And the reason we did that is because there's been so much M&A activity going on, or talks about consolidation and acquisitions within the health insurance sector, that implied volatility is very high. So it's better to be short premium, meaning selling options if you're bullish or you're bearish. Obviously, we want to be bullish here, so we sold puts below the market today with our research business. So we're going to be looking for 150 down to 142 to hold Signa. If you get below the wave one high, which is 135, trade is invalid and you need to be out of the trade, but we're going to be out of it well before then. All right, so look for that to hold. Of course, if the stock market holds the lows that we just projected, that's going to give it an extra boost. All right, so we'll leave it there, guys. For TradingAnalysis.com, I'm Todd Gordon. Good luck trading, and let's hope the NYSE stays open for business tomorrow. See you guys.